So let's bring in the floor show traders, Kenny Polcari, and from the CBOE, Alan Nuckman. I mean, Alan, look at how jittery Wall Street is right now. Actually, the VIX is off the highs of the session, but earlier it hit a one-week high of 15.29. We're at 14.59 right now. That was at 1 p.m. Eastern. Is this Apple? Is it Susan Collins of the Boston Fed? Is it inflation data?
I think it's a lack of earnings. We don't get an earnings season starting really till October. And we're in this last period here, the last couple of weeks, and we've got about 3 weeks left to go, where we don't have the fundamental facts in our face. We are having the earnings estimates come, growing as we get closer and closer to those earnings. But I think that's what the market needs to get moved forward. We've seen a price pause. We've been going sideways here in the S&P after that big breakout. Seeing a price pause here between 4,400 and 4,600 here for now almost 3 months. A breakout of that range above 4,600 hits 4,800, which are new all-time highs once again.
Yeah, at 4,800, but we're at 4,460 at the moment for the S&P. Kenny, you started to see everything that's rate sensitive really spasm. The U.S. dollar, the greenback right now, it just pierced its March high, as you've pointed out. I've been reading all of your notes all afternoon because you've been on it. But what is the message the market is sending us if you spin it forward, I guess you could say, for the next couple of weeks?
Listen, I think, and you and I have been talking about this, I think the market is telling you, first of all, it's seasonally weak time of year, we know that. But I think the market's also telling you that while people do not expect a rate hike the week after next, I think the market's telling you that it needs a rate hike, that inflation is starting to turn its head up, and that the Fed should not pause here because they'll take us right back to 79, 1980 when they paused and then had to reaccelerate. And that is exactly what Jay Powell doesn't want to do. And I think that's what we're seeing. So you see a stronger dollar because rates will go up, so there'll be more money coming into the dollar. That pushes the dollar up, pushes commodities down. Oil's a whole different story just because of what's going on in Saudi and Russia with production cuts. So that's not reacting to the dollar. But stocks are. And I fully expect that stocks will pull back. We've now broken the short-term trend line. We're now in between the intermediate and the short term. I think we're going to test lower over the next couple of weeks until we have the Fed meeting and find out what they're going to do. And I think if they pause, they're going to live to regret that day.
Okay. Okay, let me just tell you, and this isn't what we want. It's what we see and what we hear. I'm just letting our viewers know that. We're not saying, raise rates again. But you have to listen to all of these Fed heads, do you not? And Alan, what does the options market hear from those Fed heads who basically are saying, you know what, we're not there yet, and boy, we don't want to do what Kenny said, and that is, quit too early.
Right, but there is a 50-50 chance they're going to raise rates in November. So this will be a pause, most likely, is what markets are telling us, and I go with what the markets say, and there's a 50-50 chance. So we'll see what the data is over the next few weeks. But what's important to me is looking forward. If I look at the futures markets and look out to end of 2024, rates, which are at 5.25 right now, are going to be down around the 4.5% level, 4.25%. So they're saying that over the course of the next year, that rates are going to decline, a full percent. That's very, very positive. And that's what I'm hanging my hat on for this momentum move to continue.
The options market is very, very famous / notorious for predicting, and certainly it's part of the herd mentality where you can get a sense of where the market may go with the puts and the calls that are out there. What are you seeing with individual stocks and which sectors?
Well, what I've seen is old has become new again when it comes to tech. We're seeing Cisco, Oracle, and Intel all breaking out and make very close to their highs for the year. Whereas the new guard, the NVIDIA, the Apple, the Meta, the Amazon that have been leading the way, the Microsoft and the Tesla, they're taking a pause and they're about 5 or 10% off. So I think people are going to look at this as an opportunity here, as a second chance opportunity.